Okay, in the super competitive world of mortgage lending, there's this one company making a claim that is, well, it's so bold it almost sounds fake. They're called Loan Factory, and they're not just trying to win your business, they're literally daring you to find a better deal anywhere else. So the big question is, how on earth can they back that up? Let's dig in. Right, how do you even get noticed in a market that's just so crowded? Well, Loan Factory's whole game plan is just pure aggressive confidence, and it's all built around this one single powerful dare. I mean, that's not just some catchy marketing slogan, right? It's a direct challenge. It's plastered all over their website, it's in all their ads. It's really the heart of their entire strategy for talking to you, the home buyer. They are seriously, actively telling every single person out there to go put their numbers up against any other lender they can find. And get this, they actually put their money where their mouth is. $1,000. They call it their best price guarantee. Here's how it works. You bring them an official written loan offer from a competitor, and if they can't beat it, they literally pay you $1,000. I mean, that's a pretty powerful way to build some instant trust and just get people through the door, isn't it? And that really is the million-dollar question. Or I guess the $1,000 question, right? A promise like that, you don't make it lightly. It basically screams that their whole business model is somehow fundamentally different, way more efficient than everyone else's. So what is their secret? Okay, so on the surface, their official strategy seems pretty straightforward. First, they use tech to shop your loan across this huge network of over 226 wholesale lenders. Second, because they're doing so many loans, we're talking high volume, they can negotiate better deals. And third, they're totally upfront about taking a smaller profit on each loan because they make it all up in sheer volume. But, and this is a big but, that's just what they tell you. That's the surface story. The real story is way more interesting. All right, and here's where we get to the real secret sauce behind Loan Factory. To really get what they're doing, you have to understand that you, the home buyer, you aren't their only customer. And honestly, you could make a pretty strong argument that you're not even their most important one.
See, Loan Factory is running on what's called a B2B2C model. That stands for business to consumer. Basically, they are a business that sells its services to another business, in this case, independent loan officers, so that those loan officers can then reach the final consumer, you. And this is the absolute key to their entire structure.
So what this does is it creates two totally different sales pitches for two totally different groups. For you, the home buyer, the promise is simple, crazy low rates and fees. But for the loan officer, man, the pitch is a total game changer. You get to keep 100% of your commission, and you get access to this powerful tech platform completely for free. And this means the real customer is the loan officer. Loan Factory's main strategy isn't really about winning over millions of individual home buyers one by one. Nope. It's about winning over thousands of loan officers. Because if they can give those LOs the best deal in the industry, Loan Factory gets access to their entire book of business, all their clients. And when you look at the math for a loan officer, it's a no-brainer. At a typical brokerage, an LO might split their commission, let's say 70-30. So on a $15,000 commission, they're taking home maybe $10,500. But at Loan Factory, they keep the entire $15,000 and just pay a flat fee, something like $1,095. That's almost $3,500 more on a single loan. You can see why this is so incredibly disruptive for pulling in the best talent. Okay, but wait a minute. How can they possibly afford this? How do you give away 100% commissions and free tech while you're operating on these razor-thin margins? Well, the answer lies in their secret weapon, a piece of software they built entirely themselves from the ground up. It's called Moso. And instead of paying millions and millions in licensing fees for all these different software tools, which is what most brokers do, Loan Factory just built their own. A single comprehensive platform. And honestly, this is their single biggest competitive advantage. And Moso does it all, seriously. It's the system that processes the loan, it's the portal you use to upload your documents, it's the CRM for managing client relationships, and it's that real-time pricing engine that's out there shopping for those super low rates. It's basically a complete business in a box that they hand over to their loan officers. So this whole strategy of owning their own tech, it gives them three huge advantages. First, it saves them an absolute fortune in licensing fees, and they can pass those savings on. Second, it lets them be incredibly nimble. They can add new features or change things on a dime. And third, it creates this powerful moat around their business. It's something that's really hard for any competitor to copy. Now, as you can imagine, this disruptive model has fueled just absolutely explosive growth. But that very same model that makes them so successful also creates this fundamental high-stakes tension right at the very heart of the company. Their strategy to attract loan officers, oh, it has worked like a charm. They have scaled their network from just a couple hundred to now over 2,000 independent agents all across the country, and they did it in a really short amount of time. But with that kind of scale comes a massive challenge: consistency. The company's public reputation is, to put it mildly, completely polarized. On one hand, you've got over 13,000 five-star Google reviews from people who were thrilled with the low rates and had a super smooth process. But at the exact same time, you can go to the Better Business Bureau and read complaints from customers detailing absolutely horrific experiences, talking about major errors and delays all caused by their loan officer. And the friction isn't just with customers either. This incredibly fast, decentralized growth has led to some serious conflict, both inside the company and with the wider industry. We're talking about a lawsuit filed by some of their own loan originators, public fights with industry trade groups, and even their CEO getting barred from a major conference back in 2022 over partnership disputes. So yeah, there are signs of friction. So where does all this leave us? What does it mean for their future? Well, Loan Factory is facing the classic dilemma that every single fast-growing disruptor eventually runs into. When you lay it all out, you see this fascinating pattern. Their greatest strengths are, in a way, also their greatest weaknesses. That super scalable, capital-efficient model, it leads directly to that inconsistent customer experience. The very freedom and independence that attracts the best talent, it creates huge quality control headaches. The model is both the engine of their incredible success and the source of their biggest risks. And that leaves us with the one final crucial question. Loan Factory has absolutely masterminded a system built for growth, and they did it by making the loan officer their real customer. But as they keep getting bigger and bigger, can they build the systems, the guardrails, the controls they need to make sure that every single homebuyer gets that five-star experience they promise? That, right there, is the disruptor's dilemma.